Hi, everyone, and welcome to this week's installment of Mish's Market Minute, thanks to StockCharts TV. My name is Michelle Schneider, aka Mish, and I would like to take you through during a very interesting time in the market. Now that earnings season is almost completely over, I would say some pretty good setups to look at from both the buy side and also from the sell side. But first, I will take you through some of the macro because there's no point, as we see, unless you are really lucky to get involved in a market that could be ready for a major decline. Of course, there are exceptions to that, or that's getting ready for a major bounce. So I'd like to look at some of the key indices in the sectors, and then I'm going to give you a whole bunch of stock symbols. So these are the symbols I'm going to cover. Now, this by no means is the entire list of things that I would be interested in looking at. I still think that we're in a situation where we should be looking at gold and silver. I believe that they still have tremendous upside. But since we're focusing more on the earnings as opposed to the commodities, this is basically what I thought might be fun to look at for today. So let's get started. So naturally, I want to start with IWM because I still think that it is the most interesting of the four indices in terms of what might happen next with the market. We saw last week, before I talked to you, that spectacular turnaround with those triple bottoms, the two bottoms from this year, and then the bottom that we had looked at from 2021. I won't scroll back. The bounce. And now here we are getting close to not only a whole lot of resistance, but also the 50-day moving average. So this is a really good time to have the ACP plugins that we offer, the real motion indicator and the leadership. And in the real motion indicator, you can see right now that the momentum hit right up to the 50-day moving average. That's this blue line right here. But the price didn't get anywhere near. So as of price yesterday, it looked like momentum was telling us that we could see a continuation to the upside. However, because of all the other information that's come out about the market and the fact that we are actually in a downtrend, instead we're seeing a little bit of a negative day here as I'm talking to you, and we see the momentum go down. So what I would look for in terms of momentum and what makes it really, really fantastic is, as you can see here, we just go back to show how these things have worked. When this cleared the 200, this didn't even clear the 50. You can see that there in momentum. Told you that whatever was happening with price was not being followed by momentum. And then, of course, when we had the mean reversion trade, remember I told you about that too. So when we break down under the Bollinger Band on momentum and on the green line on price, and then come back through, you did get a little bit of a move up. And since then, we have not had any kind of real momentum indicators other than the fact that we're backing off once again from that 50. So that makes it kind of easy in that you would definitely want to see momentum telling us that it has shifted to the upside and that it has cleared that 50-day moving average. And then, of course, we could wait for the confirmation in price. But what is interesting, and the why I keep focusing on the IWM and the small caps, besides the fact that it really reflects the US economy, is also because it is outperforming the benchmark here. If you get the plug-in for the SPY leadership, you can see now that even though it's come down, it's been outperforming the SPY really ever since the beginning of February. So that's IWM. So basically what we're saying is we're smack dab in the middle, which makes it really tough. Now, NASDAQ is also interesting to look at because we had Powell do a lot of talking this week. And basically what Powell was saying was that he is planning to raise maybe a quarter. Obviously, he's very well aware of what the geopolitical situation could be like, but also very well aware of what's happening with the Russia, Ukraine, and the commodities and how hot now commodities are running. So that's why Qs are important to the table. Now, we did get the death cross in Qs. So that's definitely a shift. Looks like we started to rally a little bit and then came off. In terms of the momentum, there's nothing here really of interest to see. It's just sidelined. And in terms of price, again, we had that nice bounce off the bottom, but we're right smack dab in the middle of the more recent trading range. If you just look at the 200, to the low. So again, if you're saying, wow, I really don't know what to do here, give yourself a pat on the back, because it means that you actually really don't have a clear indication of what to do when it comes to equities. Commodities, whole other ball of wax. Now here is actually the SPY. And again, if we look down at momentum down here, you can see that the momentum has come off. We did have a mean reversion here as well. Actually, it happened in here and then confirmed the next day. So these are why these indicators are so important. These ACP plugins have just really helped my trading, and hopefully the information I'm sharing with you will help your trading. And of course, they're available on StockCharts. But nonetheless, you could see that at this point now, you'd still be long. However, we are running into this resistance against this 200-day. Now, notice that with IWM and Qs, we looked at two indices that were both in negative phases with death crosses. This is still in a distribution phase because the 50 is still above the 200. So I would keep a close eye here on the SPY as well as on IWM, because if this moves up first and can take out that 444 level, then it's possible that we could see more of a bounce. New highs, forget it, but at least in terms of the range bound, maybe some work towards the upper parts of the range. And that's why I really wanted to do earnings, because we had a pretty good earnings season, with some exceptions, of course, but all things considered, there is opportunity if the market tells us it's safe. Now, in terms of the momentum here, you can see that we did not clear that zero line at all. So momentum, though, is certainly not giving us any warm fuzzy. And finally, to wrap up the indices, let's look at the diamonds. Now, the diamonds, I just want to make sure. I'm going to change the leadership here. Hold on. See here, this is how you set it up. And it says right now that the benchmark is the diamonds. It should be the SPY. So let's close that. Okay, close that up. So now you can see this is well underperforming the SPY, number one. Number two is we did have a mean reversion trade. It hasn't really gone anywhere yet. And of course, it's well underperforming the SPY. So the diamonds have been one of the weakest, and that makes sense. Boeing, IBM, none of those have really done very much. And so right now, I think we're at a very pivotal number here at around this 340. If we can hold 340 and we see the other indices behave themselves, then perhaps we can see another move up here. Otherwise, if we start to roll over, particularly in momentum, as it's come back up and starts to tick back down, and this breaks down again under 340, then I think it seems to me that we may not break these lows in my range bound stagflation theory, but at least we might go back and test them. Now, I also thought it was important to cover a couple of sectors, transportation being one. And the reason why is because IYT not only is well outperforming, you can see that we cleared the 200-day moving average. We're still under the 50. And if you look at the momentum, though, momentum is improved, but hasn't cleared the 50. And the last time it did, it was back here. We got a little teeny weeny bit of a move. And this is why this momentum indicator is so great. Once it broke down under the 50 again, which was really on this day, the next day, it was telling you that this was a false move above the 50. And on the other last time it cleared the 50 here on price, it never cleared the 50 on momentum. So that's why this is going to be really important to watch now, is this momentum indicator. And yes, transportation, if we're going to see any growth in the US, is going to be reflected in not only industrials and manufacturing, but in the transportation sector as well. And we're going to be looking at some of the consumer stuff as well. So right now you want to see this hold around this 260, take out 265, and that would be extremely interesting. And I believe I cover, no, I don't cover any of the specific stocks in transportation, but I can just tell you that I would look at things like United Pacific, Federal Express, and also JB Hunt, which is actually in very good shape in terms of the chart. Now, the next thing I want to show you is I want to get away from the rest of the sectors and go to the staples, because I'm very interested in the consumer staples market right now. And you can see we're just up here to the 50, but look at the momentum. So even with the consumer staples, even with the great report that we saw in Target, in Costco, Kroger's is up tremendously today as I'm talking to you. We're not really seeing the great momentum yet here because it hasn't cleared the 200 or the 50, just as it's popping its head against the 50-day moving average. So this will either be a great short, in which case if the consumer staples go down, maybe that means the market's going up and actually some of the consumer discretionary is doing better. Or we see this pop higher, in which case it would get back over 76, but we'd also want to see the momentum clear here on the moving averages. And of course, keep in mind that it is outperforming the SPY. And then the last major sector is more of the defensive sector of XLU. And the reason why I wanted to show you utilities is because utilities actually is clearing down here. If we take a look at the momentum, it's clearing the 50. It's running right into the 200 here. It's actually the highest momentum it's been in a while, as it's clearing the 50-day moving average and back into a bullish phase. So to me, this would be a place to keep your eyes on. One thing I was very interested in, which I'm going to show you in a little while, is American Waterworks. But here, right now, to me, what is utilities telling us? That even though the Fed is planning to raise, they're obviously still feeling very dovish because it's interest rate sensitive, but it's also a safety play. It also is somewhat of a reflection on infrastructure. And I have that expression about Uncle Utes at the door. If he shows up drunk, that's usually some kind of sign of caution in the overall market. But keep your eyes here. If we get some consolidation above this 50-day moving average, that might be a very low risk trade. You can risk probably to underneath the low of the day I'm talking to you, which is at about 68, to see if you can get a move back up to the more recent highs here around 71, 72. All right, let's get into some stocks. So I mentioned Kroger. Here is Kroger. Now, Kroger reported really well. And it's interesting to me that it would, because quite honestly, even though people have to buy food, and that's the whole narrative, no matter what happens with food inflation, people have to eat. The point is that the higher prices, either Kroger has managed to figure out not to really raise those prices and pass them on to consumer, or there's something else going on about this particular chain that has done very well. But nonetheless, this is the type of situation where not only did you gap up to these highs, but now you want to see what happens with some level of consolidation, and you have 50 that you can use as a support level. So if you're interested in buying something that is strong, I would see a little bit of consolidation here, and then I would use a risk just slightly under 50 to see where this thing can go to the upside. The next one is more of a discounted store. And I have quite a few of those because I think they could be very interesting. And this is Costco. Now, Costco also reported, you can see it's also in a bullish phase. It's still over the 50-day moving average. It hasn't quite yet really cleared the 6-month calendar range, because in January, that first day in January is all the way up here. And so that means that we have a long way to go to get up to this 566 level. But that doesn't mean that we couldn't get up there. So right now we've got things going in the right direction, except once again, not so great in the momentum, even though it's showing great leadership. So I'd be a little bit more patient, maybe let this do a little bit more work. You have a good risk reward, basically under this 50-day moving average. And if we can clear and get better in momentum, then Costco could be a place to go, especially, as I said, with inflation out of control. Now, the other one, I've actually talked to you about this. This is Beyond Meat. And my theory with Beyond Meat, of course, is that at some point, with wheat prices being as high as they are, and meat prices and chicken prices and corn prices and everything else, soybeans, so expensive that people might actually think that it's time to look at a more plant-based diet. And Beyond also fell to the really close to where it actually debuted on its IPO price, somewhere around $40. That to me was compelling. So at this point now, we had a very interesting, after the earnings report, we had a big sell-off. There was huge volume this day, and then the next day it had a reversal pattern. Didn't quite have it on the mean reversion on momentum, but now you can see the momentum is over the Bollinger Band, and it hasn't really gone very anywhere yet. But I say yet because with this momentum continues to incline, and we can get really and hold over the, say, 47.50 to 48, then I think we can see a rally in Beyond. And I think
Well, there's a couple of choices of where it can go. My first target would be somewhere between 52, 53. Maybe it can get to 60 or maybe even higher. You never know. This is the type of company with the stock so cheap that can be bought out by another major food company. I did think about that. It sort of came to me today. So keep your eyes on Beyond Me. We're already in it, by the way. Then I just wanted to show you something in the crypto mining because Canaan Banking, it reported, and even though cryptocurrencies have come off from the high, it got close to 45,000 in Bitcoin. Now it's trading, as I'm talking to you, about 42.4. The mining situation has improved. So this is doing a lot of crypto mining here, this particular bank. So you can see it's technology and semiconductors, but it had great earnings. It popped up. So this could be another interesting opportunity because look at your momentum here. Here you're having a diversion to the positive, meaning it's over the 200-day moving average and inclining. Best momentum we've had in a while. Certainly outperforming benchmark here. And now that we've cleared all this work that we've done, if you follow my cursor to the left, pretty much since December, we've just taken out all that work. This says that this is in a pretty good uptrend right now. So if I would be looking to get into this one, I would probably say somewhere in this around 630 level, you can risk to underneath the low or maybe even a little lower using the top here at about 575 now as your risk to see if you can get up to the 200 or beyond. The next one is an example of why, unless you're really careful and have a cushion, you never hold into earnings. And number two is this is a technology company that people had huge hope for. Kathy Wood being one. Now I understand she liquidated this stock, but nonetheless, hadn't you liquidated, you'd be in for some pain today. Now I just want to take a look at this a little bit historically, because even though we've had this major move down, you can see that as we were in last year, we were at these levels. It actually had a beautiful reversal. And then, of course, this was this 2021? Yeah. And then really had a great move up. So it's possible that if we hold these levels, if we go back now to the daily chart, if we hold these levels, look at what we've got here. We've got a Bollinger Band on price, which is now above at the high. We have a Bollinger Band on the real motion. So if this can clear back over the Bollinger Band in momentum and clear back over the Bollinger Band in price, it's possible that maybe the worst is over in snow. And that's why I wanted to show this to you. Now, Kohl's is another one that's a discounted chain store that did very well with earnings. And with Kohl's right now, you had the move up. Let me just make this a little bit so you can get perspective. You had this big gap up here back in the beginning of the year. And now you had another situation where it tested the 50 when the market came off and now is back above not only the 50, but if you look at momentum here, it's back above both moving averages, the 5,200. So the momentum is good. It's outperforming. We're getting 2 inside days in a row. What does that mean? Here was the range 2 days ago. The range yesterday was inside that range, and the range that I'm talking to you is inside both of those days, which means that if this can get over this high of 59.90, let's call it 60, you can pretty much risk tight to under 57.50 to see if this thing's got some legs to continue to go higher. And that would be certainly something that I would be keeping my eye on. In fact, I am going to make a note of that. So 59.90, 57.50. Okay. Next one is Target, since we're keeping with the discounted chains, because I keep thinking that people are feeling good at coming back from the pandemic, but not that good because they're paying a fortune for gas and for food. So here we have now Target. Now Target reported and had this big move up. Inside day the next day, that was yesterday. Now today we took out the price of the day before, but we haven't really held it. But here you have this green Bollinger Band here. So we're running into some resistance. We take a look here. We're above the 50, well above the 50, well below the 200, but we're also below the 0 line. So the momentum hasn't quite caught up yet, even though it looks like it's outperforming. So what I'd like to see with something like Target at this point now is, first of all, I'd like to see it hold around 220. And secondly, is I'd like to see a close above this Bollinger Band or above 227.50 to see if we can make our way up to the 200 and beyond. Now, Palantir, I wanted to show you because this is, to me, one of my favorite stories of if you liked it at 50, then you loved it at 30, you loved it at 20, you loved it at 15, you loved it at 12, and then it crashed all the way down, broke 10 on this day, and then reported, and it hasn't really done very much. But people still think this is a really good company, so I wanted to show it to you. So let's take a look at what the momentum is telling us. It's declining, not very good. Or however, it did hold the Bollinger Band and broke out on this day. So you got a quick sort of scalp, never took out this Bollinger Band. Now, to me, what this looks like is, besides the gross underperformance, is that unless it stabilizes and takes out the 50, then I would be very interested. If we can get a momentum move above the 50, then I'd say maybe the stock has bottomed. Otherwise, it's hard to go short an $11.50 stock, but it's not the worst thing in the world if the market especially gets heavy, because you can actually risk on the short side to over 12.50. All right, I wanted to show you AWK. This is the American Waterworks. I like this. It's still in a downtrend and still very far away from the momentum indicators that it needs to clear. But nonetheless, I like the fact that it made this bottom and now is kind of popping up here. So with this case, it's very simple. I think if we're going to see moves in the water utilities, which a lot of people are predicting, and it's not crazy idea, especially since it's so outperforming the SPY, then first of all, you want to see this hold somewhere around 152, 153. And then you're really going to want to see this momentum increase at least to get it close to that 50-day moving average. So even if you had to pay up, that would be a good situation to be in. And you certainly don't want this to break down under 149, 150. Now, medical devices is something I've talked about a lot, so I wanted to show you Stryker, because Stryker is in an accumulation phase. Not bullish because the 50 is still below the 200, and we're getting an inside day, and it cleared the 50-day moving average in momentum. Obviously not the 200 yet. It's leveling off on its inside day, obviously well outperforming the SPY. So this would be something I would put on my list for Monday, particularly if the market holds. This gets over, let's say, 270 and change, then I think that you probably can see this thing move up. I still have my theory about medical devices being a way of growth as people come back from COVID and start doing routine procedures. And Stryker is a company that sells a lot of medical supplies. And then we've got a couple more left here. MP, which Mountain Pass has been very difficult to trade. It reported really well and then has come back off with the rest of the market. Now, this is rare earth minerals, but I think you got a pretty good risk down here at around 39.35, 39.25. If this thing can get back over that 50, even, and the momentum can start to move back up over the 200, let's say, you can see the price is well over the 200, and we stay somewhat in leadership against the SPY, then this could still be a trade. I still think this has tremendous potential, but there is some issues with it in that terms of they have to do a lot of their manufacturing in China, even though the rare earth minerals are produced here in the United States. And I wanted to give you another natural resources play. This is EOG. This also reported. This is energy. Now, of course, you can see the momentum is strong here, but not as strong as it was a few weeks ago. And you might be actually getting at least somewhat of a signal that it's a little tired here as it's broke down under the Bollinger Band. But I would keep an eye on this, because if it can get back down to around 110, it could be a buy. And keep your eye on the momentum here, because if the momentum continues to go up, then it's possible that this is just a little brief rest. We get back through around 120 on this, and this too can go much higher. And the last one is sort of a transportation comeback play that reported. I liked this stock, but I wouldn't have bought it on an inside day ahead of earnings. But this is Gogo. Look at the momentum here. I mean, that's what you want to see. You want to see momentum really explode along with the price. And right now, it should hold around this 14.85, even though it's trading about 16. But this is another one. We got to do a little bit of history here. So if we just look at a little bit of history here on the weekly chart, we've got some resistance up here, but if we get through that, then it's possible we can see a move higher. If we go back historically in Gogo, you can see that back in the day, this thing, once it clears $19.20, this can go up back up to the highs. But if we just scroll back out right now, like I said, here's 1285. Interestingly, that's your 50-week moving average. We need one more push over the highs here, and this one could be a nice play as well.
Okay, guys, that's a wrap. If you want more content, I welcome you to go to our website, marketgauge.com, and sign up for our daily. Every night you get chock full of information about which stocks to look for, or indices, or just good old trading tips. That will give you access to me every single day. Thanks so much, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.